Here are the crypto top headlines covered in this video. Bitcoin risks 30% loss against XRP if triple bottom confirms. Also, FDIC nominee Goldsmith Romero says banks can custody digital assets. Plus, crypto holders predicted to triple by 2026, says Lunu CEO. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Bitcoin risks 30% loss against XRP if triple bottom confirms. XRP has significantly lagged behind Bitcoin in 2024, but a recent Mt. Gox and German government-led sell-off in the BTC market may spark renewed interest in the altcoin. After hitting a 4-year low, XRP appears on the brink of a comeback against the Bitcoin trading pair. Fueling this optimistic turnaround is the emergence of a classic bullish pattern, namely the triple bottom formation. XRP eyes a 30% rebound versus Bitcoin. A triple bottom pattern develops when the price forms 3 distinct lows, all reaching a similar price level, thus indicating strong support. After the third low, the price breaks above the neckline resistance level formed between the lows and, as a rule of technical analysis, rises by as much as the maximum distance between the pattern's lowest point and the neckline. As of July 12th, the XRP to BTC pair was testing its neckline support of around 793 Satoshis for a potential breakout. Additionally, the pair's weekly relative strength index, or RSI, reading of around 36 indicates that XRP is undervalued versus Bitcoin, further boosting its recovery potential in the coming weeks. That said, a decisive close above 793 Satoshis will likely push XRP to BTC toward its triple bottom target of around 1,055 Satoshis. Conversely, a pullback from the neckline resistance, akin to similar retreats in recent history, risks pushing XRP to BTC toward its local bottom of 664 Satoshis, down by over 15% from the current prices by August. Bitcoin's 20% drawdown benefiting XRP price. XRP's renewed strength versus Bitcoin primarily comes in the wake of the German government's relentless selling of its BTC holdings in July. For context, the wallets associated with the government have witnessed 46,200 BTC in outflows since mid-June, amounting to around $269 billion worth of potential sell pressure. Furthermore, the ongoing reimbursement of over 140,000 BTC to Mt. Gox creditors has reduced traders' appetite for Bitcoin, with the XRP to BTC pair up over 20% in July. Bitcoin dominance overall slipped to 54.55% on July 12th from highs of 55.46% a week ago, suggesting that traders could be rotating into altcoins while the BTC price consolidation period plays out. Looking broadly, XRP is relatively underbought versus most of the top-ranking crypto assets so far in 2024, with its year-to-date returns sitting at around negative 26.5%. The weekly RSI for XRP to BTC is rebounding after hitting its lowest level in 2 years at around 33, just 3 points above the oversold threshold. Historically, when XRP's weekly RSI last reached 33, it was followed by an impressive 194% rally, suggesting a potential for significant upward movement this time as well. In comparison, BTC's weekly relative strength is in a correction mode, having declined from a very overbought level of 88 in March to a neutral level of 45.5 as of July 12th. This decline indicates that Bitcoin's bullish momentum has significantly weakened in the past 2 months, which may benefit underbought big cap altcoins like XRP in the coming weeks. XRP may reap additional benefits from the growing buzz around its inevitable exchange-traded fund launch. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, FDIC nominee Goldsmith Romero says banks can custody digital assets. The Federal Deposit Insurance Corporation chair nominee stated her position amid the failure of Congress to overturn the SAB 121 veto. During a hearing on July 11th, Christy Goldsmith Romero, the nominee for the head of the Federal Deposit Insurance Corporation, or FDIC, testified to Congress that banks should be allowed to custody crypto assets. When prompted by Senator Cynthia Loomis, the FDIC nominee responded that crypto is another business just like any other business, before explaining her belief that it is not the FDIC's role to instruct banks on which assets to custody or hold. The Digital Chamber, a Washington, D.C.-based crypto advocacy group, previously expressed interest in Romero's nomination. In a letter to the Senate Committee on Banking, Housing, and Urban Affairs, it cited her forward-looking stance on the crypto industry. Senator Loomis's question was the only outright mention of crypto during the nomination hearing to evaluate candidates for roles at the FDIC, Securities and Exchange Commission, the United States Treasury, and the Financial Stability Oversight Council. Congress fails to overturn Biden's veto of SAB 121 repeal. The nomination hearing came on the same day Congress failed to overturn President Joe Biden's veto of the Staff Accounting Bulletin 121, or SAB 121, repeal, with the final vote falling along party lines and 60 votes shy of a two-thirds majority. SAB 121 is an SEC rule requiring banks that custody crypto assets to hold the assets as liabilities on their balance sheets. In a roundabout way, this disincentivizes banks from holding digital assets on behalf of customers. The ongoing regulatory battle in the U.S. Cryptocurrencies have been thrust into the national spotlight and have become a campaign issue ever since former President Donald Trump declared himself the crypto president and leveraged the hot button issue, creating a fertile campaign battleground. The 2024 election and ongoing SEC hostility have prompted a widespread response from industry executives who are now meeting with D.C. lawmakers and mobilizing political initiatives like the Bitcoin Voter Project and the Stand with Crypto Political Action Committee. On the judicial front, the Supreme Court voted to overturn Chevron USA Inc. versus Natural Resources Defense Council, reversing a 40-year precedent allowing federal regulatory agencies to engage in rulemaking without congressional approval. This recent Supreme Court ruling could have seismic ramifications across America's administrative state. Our next top headline, crypto holders predicted to triple by 2026, says Lunu CEO. The current 560 million crypto holders could triple in number during the next 2 years, but user experience remains the biggest challenge. Cryptocurrency adoption is on track to surpass the much-awaited 1 billion user mark, which could happen as early as 2026. According to Pavlo Denisuik, CEO of crypto payments firm Lunu, the number of cryptocurrency holders could triple over the next 2 years based on current user growth. During a panel discussion at NFT Fest 2024, Denisuik said, "Within 2 years, there will be at least 2 times or 3 times more crypto holders worldwide. This is where we get more adoption everywhere, and in terms of payments as well. According to the 2024 Cryptocurrency Ownership Report by AAA, there are an estimated 560 million crypto holders worldwide, meaning around 6.8% of the world's population holds crypto. Crypto adoption will happen as soon as the infrastructure is there. With nearly 7% of the world holding cryptocurrency, the adoption of crypto payments is only a matter of time. According to Dennis Suick, crypto payment adoption will occur as soon as mainstream companies like Starbucks start offering the necessary infrastructure. Crypto payment adoption is not something that you need to convince someone of. Whenever the infrastructure is there, whenever you come to your Starbucks shop or somewhere else and there is a sticker saying we accept crypto. It's just another payment method, added Dennis Suick, explaining that crypto payments aren't significantly different from today's credit card and neobank-enabled digital payments, which are already popular in the mainstream. Dennis Suick is the CEO of Berlin-based Lunu, a company building a stablecoin-powered payments ecosystem for economic integrations. Stablecoins are crucial for mass adoption, but user experience remains the biggest challenge. Stablecoins are considered one of the main on-ramps from the fiat to the digital economy, and they will remain an important part of reaching the first billion crypto holders, according to Dennis Suick. He said, "Stablecoins are very important for adoption. In our case, we almost never see people paying in Bitcoin, even though Bitcoin was invented as a digital currency." The stablecoin market is currently worth over $163 billion, or 7.7% of the entire crypto market's $2.11 trillion market capitalization, according to CoinMarketCap data. However, reaching the first billion crypto users will require more beginner-friendly applications, according to Chintan Turakaya, Senior Director of Engineering at Coinbase. Speaking exclusively to Cointelegraph at ETHCC, Turakaya said, "If our goal is to bring in the next billion users, and let's start with just 100 million, we have to take all those friction points out." So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.